Why are sticky prices key to understanding core inflation? Imagine trying to change the prices on a menu at a restaurant or a price tag on a product. Sometimes it takes time or effort to make those changes. That's what sticky prices are all about. They are prices that don't change quickly or often, even when the economy shifts. This slow response is important when we talk about core inflation. Core inflation measures the long-term, steady trend of rising prices, but it leaves out the most unpredictable parts like food and energy prices. Many of the prices that make up core inflation, such as wages, rent, and services, tend to stay fixed for a while. This stickiness means that when costs go up or down, prices don't change right away. Instead, they adjust gradually over time. There are a few reasons prices stay sticky. Businesses face what are called menu costs, which are expenses for changing prices. For example, printing new menus or updating computer systems costs money and time. Many prices are also set by contracts that fix prices for a certain period, like rental agreements or wage deals. Companies also think about customer expectations and prefer not to change prices too often, because customers might get annoyed or think the quality is lower. Firms with some control over prices may keep them stable to avoid price wars or damaging their reputation. Because prices don't change instantly, when something shocks the economy, like a sudden rise in oil prices or a spike in wages, prices stay the same for a while. This causes inflation to change slowly rather than suddenly. That's why core inflation, which ignores volatile items, tends to move more steadily. It's also why policymakers find core inflation more reliable for understanding long-term trends. When central banks change interest rates or adjust the money supply, the effects on prices don't happen overnight because of sticky prices. The economy responds first through changes in output and employment, and only later do prices catch up. This slow adjustment helps explain why inflation doesn't jump around wildly and why core inflation gives a clearer picture of the economy's true inflation trend. In short, sticky prices are the reason why inflation evolves gradually. They make core inflation a better way to see the persistent, underlying trend of rising prices, helping everyone from economists to policymakers understand what's really happening in the economy.